Good afternoon and welcome. So glad you could be here for our build to rent presentation in Oklahoma. We have Leah Slaughter here with us, who's on vacation and just got out of the ocean. So lucky girl. Welcome, Leah.
Thanks for having me.
Yeah, we wanted to get this launched right away and didn't time well with your vacation plans. So thanks for being here.
Yeah.
Okay, so we'll just go ahead and get started. This is my Grow Development second fund with Leah. The first one, of course, is in Texas. You've probably heard about it. You may already be invested in it. This is exciting, and we'll kind of show you the proximity to where we're currently buying existing homes for the Texas fund and how that connects. So I'm going to forward the slides. There we go. I do want to let you know that this is, because it's a fund, it is regulated by the SEC. So this particular presentation is not an offer to sell a security or anything. That only happens through the PPM, which you would find on growdevelopments.com. Just click on the Invest tab. The strategies mentioned in the presentation may not be appropriate for everyone, and always consult your tax professional and or an attorney to discuss how this would affect you, because depending on where the money comes from that you're investing, it may be taxed differently. So super important that you present that and also have an attorney review the documents so that you truly understand the investment. And then of course, past performance is no guarantee of future results. Real estate purchases are always subject to investment risks, including the possible loss of amounts invested. While every effort is made to maintain accurate and current information, the possibility of errors or updates always exists. And of course, what we've learned over the last 3 or 4 years, if there's one thing we've learned, is that we cannot predict the future. Even when you've got all the best data in front of you, there could be a curveball. With that said, I'm super confident about this area. And the team. So on today's agenda, we will meet the team. We'll talk about why Oklahoma, talk about the business plan, the fund details, and how to subscribe. All right. And again, this one is available for accredited investors only. I apologize if you're not accredited. We so want to do a fund with you. Just the SEC is really strict about it. Here are the ways that you can become accredited. Have a net worth over $1 million, excluding your primary residence. If you have a bunch of equity in your primary, you can get an equity line on that, take it out, put it in a bank account, season it for a couple of months, and I'm told that counts towards that $1 million. Income over 200,000 or 300,000 if you're married in each of the prior 2 years, and you reasonably expect the same for the current year. So these are all separate. You don't have to meet the requirements for all three. And then you could be an investment professional in good standing, holding security licenses, either Series 7, Series 65, or Series 82. Now, it's my understanding there's lots of rumors that this definition of accredited investor is going to change according to the SEC, and we don't know if that's for the better or the worse. I have heard in some cases they're going to make it harder to become accredited, and I've heard in other cases easier. So we shall see, but this is what it is right now. Okay, so about Leah, I assume most of you know who she is. She's been working, her team, OmniKey and Michael Slaughter, her husband, have been working with Real Wealth for over 10 years now, helping investors acquire individually properties in the Texas area. We started last year. We thought, well, gosh, there's a lot of investors who just would rather have someone do it completely for them, be completely passive. They want to go travel the world, or they're busy. They don't want to have to get loans themselves. They don't want to have to do anything. So we decided to do a fund last year, and this is the second fund. So Leah's born and raised in DFW. I love that. She knows the market better than anyone, in my opinion. Co-founder and owner of OmniKey since 2006. They own multiple companies. They have 4 adopted children, very involved in community and local nonprofits. They are national real estate speakers, and they own approximately $40 million in real estate. And my guess is most of that is in this area. Is that right, Leah?
100%.
Yeah, she's not diversifying that way because of her confidence in the Dallas-Fort Worth area and now Oklahoma. So I'm going to hand this over to you, Leah, because I talked about it on the market, and I got, it was kind of like, what are you doing that nobody else is doing? And I was like, I guarantee you, no one else is investing in Thackerville. So right, and I had a comment in the comment section on YouTube of, well, that's daring. So explain to me why you are so bullish on this area just over the border from Texas.
Yeah, so it's interesting. This part over the border of Texas actually grew before the other side in Sherman and Denison, where we're currently heavily investing. The amazing thing about this area is you cross that border and it's like you enter casino land. And it's kind of interesting because for those of you who don't know, gambling is illegal in Texas and marijuana is illegal in Texas. And so everybody who wants to do either of those two things goes to this border and they cross. And everywhere there are dispensaries, groweries, and then all of these casinos. And it sounds like, well, why does that matter? Why is that a big moneymaker? Well, it's a big moneymaker, I assure you. And so actually the world's largest casino is at that border. And you're probably thinking, well, casinos, that's interesting. Why do we care about casinos? Well, Texans, we have a lot of money here in North Texas, a lot of expendable income. And I'm not going to focus too much on the why, but the bottom line is it's a massive industry. It's about $98 billion tax impact and the tribal revenue share for these casinos. It's about 1.69 billion in gross gaming revenue. And Oklahoma actually has the second largest revenue of all states, actually third largest, I apologize, in all gambling. So the amount of money that's pumping through this area is massive, and that major employer is right over the border. That employer is actually the fourth largest employer in the state of Oklahoma. So we're talking about a massive number of jobs in Thackerville, this tiny little town where there's almost no real estate. So I bought my first property in Thackerville, I believe maybe about a year ago, and that property appraised for about $80,000 more than what I paid for it. And I knew that Oklahoma had amazing potential because there's a huge scarcity of property. You go there and there's a lot of hotels, like the little guys, like what we look for when we're scoping areas, your Holiday Inns, those types of properties. You've got this mega casino with tons of resort towers. This casino has tons of different cities and all this stuff there. You've got this beautiful recreational area with crystal clear water that people go to go stay, but there's nowhere to live, literally nowhere to live. But you've got all these employers, you've got all these businesses, and so everyone's having to move to Texas. Well, the negative of Texas is, of course, I love Texas, but if you had to find a negative, it's more expensive and there's higher property taxes. And so a lot of us investors have been looking heavily at Oklahoma. The issue with Oklahoma is no one's building up there. Why would you go build right on the border of Oklahoma when you can build in Texas and sell for more money and it's easier? And so this area, although it has this massive need and this massive housing shortage, has had nothing happen until now. So we met this builder, bought a property from him. We approached him and said, look, we'd love to do a project with you. Are you open to building? And of course he said, well, I'd love to build. Knowing the interest rates were going up, having a buyer like us that comes in with cash is just extremely advantageous. And of course, knowing that we close. One of the ways that we get property for not only the other fund, but this one is people know we're going to close. That's what our reputation is. What we didn't expect is the price that he was going to be willing to sell these for. So we're going to be talking about that here shortly. But the bottom line is this area has a massive housing shortage. And then you cross the border, you get into Gainesville, which is just a few minutes away. And Gainesville is growing faster than even Sherman and Denison is in some ways. So our other fund, we've been heavily focusing on Gainesville. If you've been listening to me talk about this area, we absolutely love it. So when we look at Gainesville right now, it's just incredible growth happening right now. So one bedrooms have gone up almost 73% in the last year in price. Two bedrooms have gone up almost 16%, and three bedrooms have gone up almost 21%. So when we're talking about price growth of this area, it's astronomical. And again, it's because there's a housing shortage, but also because there's all these jobs, all these employers, and there hasn't been homes. So within 20 minutes of Gainesville, you've got major distribution centers for Walmart and Sam's Club. You can get into Denton County, one of the largest counties and areas in Texas, and this entire area of North Texas, in less than a half hour. So although when we say it's in Oklahoma, it sounds really far, you're talking a half hour into major metros where if you were to move here, that's an area that you would want to live in. And so the potential is just huge. So one thing I do want to point out about this area in Thackerville is most of what has been built there and what is being built there is what we would consider luxury property. The median list price in Thackerville right now is $598,500. That's actually the same as the heart of Collin County in the most desirable part of North Texas. So we are getting entry level fourplex units in an extremely desirable area with a massive housing shortage that's drivable to all the Texas employers with lower property taxes and built-in equity. It really is the best of anything that you could look for in real estate.
Well, that sums it up. That's much better said than what I could have done. Oh no, what just happened? Okay, I don't know. Maybe that, okay, it just happened to me. All right, so let me click on that. Okay, whoops, sorry guys. There we go.
Yep.
You may
So
have already explained this, but
yeah, so it's the first city north of Gainesville. And so when you cross the border, and keep in mind, the border is only an hour from downtown Dallas. So even from the part of Dallas we're not going into, Oklahoma's not far. A lot of people don't realize how close we are to Oklahoma. And so it really was natural to expand into this area anyway. We've been selling Oklahoma on the OmniKey side for over a year. Similar properties are 100% occupied with wait lists. I actually already have applicants wanting to lease these that are not even going to be done for 2 months. And future job growth is predicted to be almost 50%, which is, of course, much higher than the US average.
wow.
So this is that Windstar Resort, and this is just one of their hotel towers. It's incredible. Again, top 4 employer in Oklahoma, and there are 59 major employers, and I'm not going to read all these off, but just within 30 minutes of the project, there's almost 3,700 jobs available, and that's just on a quick search on Indeed. That doesn't even include everything ramping up. And of course, for those that want to get into the other areas of Grayson County that are growing so much right now, that's not far either. So you really are very interconnected, and it's right up Highway 35. So you literally could hop on the highway and be in downtown Dallas in less than an hour, a shorter commute than someone who lives in LA. So again, just location proximity wise, it just makes sense.
Sin City right there.
Yeah, you know, the interesting thing, if you've never gambled in Oklahoma, their payout is a lot higher. So what happens is North Texans, they go to Vegas, they've been going to Vegas, they go over the border to Oklahoma and they realize that they don't lose as much. And so they keep coming back. But they also get all the big concerts. And so they have these massive venues that they build. And it feels very intricate and small, but they can hold a lot of people. And their concert tickets are like $50. So a lot of people on the weekends, they go up to the casino on the weekend, they go see, you know, one of the big stars, they get all the big names, and then they gamble before and after. And so most weekends, they're completely sold out of hotel rooms. That's how popular we're talking about this area is.
Someone just asked, is Thackerville on a reservation?
Thackerville is a city in Oklahoma. The casino itself is on a reservation.
Okay.
Yeah.
Okay, what's happening here? There we go.
Yeah. So when
No,
we talk about
that, yeah, we didn't
yeah.
cover this.
So this is just looking at those rent numbers and looking at sale values like I was talking about, where the homes in Gainesville, they're just extremely expensive and going up. And so this is when we're looking at Gainesville, an average price point of almost $315,000. This is very similar to what we see in Sherman and Denison and areas around that. And so you'll see, again, major price growth in Gainesville, even beyond actually what we're seeing in Grayson County because it was so undervalued. And again, you can see that it's just continuing to rise. But we're also seeing the same difference in rent numbers. So rents have gone up significantly. They're continuing to go up. But what you'll notice is they're very stable. And that average rent price is about $1,350. And the average property in this area is, again, similar to Grayson County on the other side, about a 2-bedroom, 1-bathroom. So just fantastic rent potential here. And when we talk about the specifics of the units, you'll see why. So Ardmore is actually to the north. And so although the big play, of course, is talking about Texas, Ardmore is also a massive city with a ton of employment, very developed, and it's just to the north of Thackerville. So this is about equidistant from where Thackerville is relative to Denton, so about a half hour. It's the 18th largest city in Oklahoma, and it has major distribution centers as well. You have to remember, we're right on Highway 35. You literally could walk to 35 from the project that we're doing. And so there's lots of distribution centers to feed the entire country and this region in all of these areas, not only on the Texas side, but also on the Oklahoma side. So you've got Dollar Tree, Dot Foods, Best Buy Warehouse, tons of different manufacturers and distribution centers in this area as well.
Okay, so I think you'll like this page. this is the business plan for our fund, Real Income Properties Oklahoma One, to acquire up to 10 newly constructed fourplexes in Thackerville. Refinancing of first properties homes will purchased will buy more homes, hold for several years, sell or refinance in the future. The target IRR for this is 11 to 12%, conservatively underwritten, preferred return at 6%, and a 4 to 7 year time frame for the hold. What would be the deciding factor of selling at 4 versus 7 years, or 7 versus 4?
So what the value is going to do is one piece. Obviously, the equity capture and the appreciation is huge, but also just what this area does. I think this area is going to just explode. Water rights are not as easy here as what they are in Texas. And so like even this project, he had to go and get water rights. It's not that the water's not there, it's getting the money to go get the water. And so they're starting to work these kinks out, and that's why more developers are now coming in now that they've kind of got their system down. And I think we're going to see massive growth and expansion in this area. So we're going to be watching the values, we're going to be watching the rents, and when it makes sense, that will be the time in which we sell.
Okay, I'm going to answer a couple of questions while we're on this part. What industries are the job growth in? What's the property tax rate difference? And is it a landlord friendly area?
Yeah, very landlord friendly. There's actually not a ton of laws as it pertains to property management, so quite simple. It's actually simpler than North Texas in many ways. And the property tax difference is almost 1%, so it's significantly lower. And again, of course, because it's new construction, we're going to have difference in assessments. They won't be done in January when they're assessed, and so we should have some great benefit in the beginning. And remind me what the third part was. Oh, what industries? It's a myriad of industries from every type of sector. You've got manufacturing, you've got retail, you've got employment services, you've got casino, you've got business, you've got a little bit of everything. It's extremely diverse, just like North Texas.
And but people could be working in Gainesville and live here because it's cheaper for them to rent
Yeah,
as well.
absolutely. And all the people who are working in Oklahoma currently having to live in Texas, that's a huge detriment to them because they're having to move, 20, 30 minutes from where they actually want to live. And Gainesville's not cheap either. And Gainesville's only getting more expensive. Gainesville's another one of those areas that there's a massive shortage of apartments. The apartment builders went down into Denton County. They went further south because they could charge twice as much. So just like we see on the Sherman-Denison side and on the Durant side on going up 75, that's north of Sherman and Denison, it's the same thing. There's just not many apartments, if any, especially not new ones. And so there's this massive housing shortage for affordable housing. And that's kind of a theme across all of North Texas and Southern Oklahoma. But it's just really, really bad in this area because all of the builders have focused further south.
Yeah. Another question, why is the median price of $600,000 so high? Is it median income, low supply, or any other reason?
Because it's a very desirable, almost vacation-y area because of the casinos and because of what's up there. Again, there's a massive industry as well in marijuana and dispensaries. There's literally, you cross the border and they're everywhere. And so there's huge money up there. Huge money up there. In fact, one of my buildings, I have a building I bought from the same builder, and all 4 tenants work in dispensaries or in the manufacturing and growth of marijuana. So it's just big industry in this area, and it's booming right now because, again, this is not legal in Texas, and Texas is extremely conservative. I don't think it's going to be legal anytime soon.
So is this where people go if they're like bachelor party type thing or bachelorette party, or it's just go?
Yes,
This is where they
it's every weekend. I know people who go up there every weekend. They built these massive resort pools, and I have friends that go up there literally every weekend just to stay in these 5-star resort hotels. I mean, they've got big spas and shops. It's the largest casino in the world.
Yeah,
Yeah.
That says a lot.
Yeah, it's huge. It's really neat. If you ever come to North Texas, they did it's a big circle, and each section is a different city. So you've got like Rome, and you've got all these different areas, and they have all the architecture and art and stuff from those areas. So it's kind of a marvel in that sense as well. And then tons of restaurants everywhere. But the concerts are a huge draw.
Got it. Okay, so about the fourplexes.
Yeah, so we have 4 units in each building, and you've got 2-bedroom, 2 bathrooms, and 3-bedroom, 1 bathrooms. I'm anticipating that the 2-bedroom, 1 bathrooms are going to get $1,200, and the 3-bedroom, 1 bathrooms are going to get $1,300. I think it's possible we're going to get more, especially based on what I'm seeing from the pre-leasing that we're just now starting. but these are beautiful properties. They have stained wood moldings. They've got all the types of features that we're looking for, the big open kitchen, the breakfast bar. It's just a fantastic layout, and they each have their own walk-up. So it's a fourplex, but they feel like individual attached homes, and that's what people are looking for. But again, just moments to get to the highway, very, very quick to get back to the border if that's where they need to be. And we bought them for $450,000, and we've pre-contracted them. So to put it into perspective, my building that I have right across the street, it's like almost walking distance. My units are 2-bedroom, 1-bathroom, so smaller than any of these, and it just appraised at $530,000. So these are bigger. These are going to have much higher rents, and mine appraised at $530,000. And again, to remind of the numbers, we are contracted on these at $450,000.
Yeah, so I want to let people know that Leah called me months ago saying, okay, I'm going to buy these either way. I'm putting my money down on them. We can do a fund, but if it doesn't work out with the fund, that's okay.
Yeah.
So you're
I said I'm going to buy all 10 either way.
yeah, and I'm like, yeah, because we're going to have a tough time selling Thackerville. But I got to tell you, just in the last 5 minutes, I think most people get it. It just sounds like a mini Las Vegas, but driving distance. And like you said, for all the reasons that they can't do these things maybe in Dallas, but it's a quick drive. Plus all the growth. I mean, just the cheaper cost of living, where now all those employees don't have to drive so far.
Well, and there's like nothing like this in this area. I encourage you, go onto Google, go onto the aerial view, and go walk through this area on Google, and you will see nothing. There's like maybe 10 fourplexes that have been built and a bunch of like farmland type property, and nothing until you get to the major cities 30 minutes north. Nothing, or until you get back into Texas. And something like this in Gainesville is going to be a lot more expensive. I mean, you're talking here $112,500 a unit. In Gainesville, we're seeing 2 bedrooms go for somewhere around $160,000, $170,000 new. So there is a massive difference here, not only for affordability for us as investors, but also for affordability for those people who are living there. But a lot of the potential here is not just the great value, the equity capture, the housing shortage in this area. It's what's going to happen to this area as it continues to grow.
Mm-hmm. Yep. So some of the investment highlights, build to rent residential rental properties. I mean, there's not much to argue with a new property. You get lower insurance, it's easier to finance, less issues, and certainly the built-in equity. Anything you want to say about your property that you bought, and just like your preference to new versus old?
I love new, obviously. Systems are new. You can really kind of count on what your income's going to be. And, that goes into play when we're looking at when to sell, right? It's the same thing if you renovate a property, you buy new, those systems are going to start aging. So that's where that kind of 4 to 7 years comes from. Mine has stayed 100% occupied. I've been able to raise rents since I bought it. When I bought it, tenants were not paying water. I was able to get all the tenants paying their own water. And again, it goes back to owning a property management company and that being kind of my core of how I think. When I bought it, all of those people were pretty much paying the bills. They were paying the internet, they were paying the water, and I bought it. And it's like, well, first off, you're undercharging in rent and you're paying accommodations on behalf of these tenants. And so we stopped all that, and only one tenant moved. Only one. So all 3 stayed. And it's just been an incredible property. I've had 0 repair issues, 0, maybe like caulking or something simple, but it's so unmemorable I can't even remember. Easy make ready, rented easy. And like I said, I already have a wait list for the project. So I cannot understate enough how there is nothing to rent in this area, literally nothing.
And I made the assumption that most of you here already know Leah. But if you didn't know, she's first and foremost a property manager. That's how we found her in the early days. And she has, managed many thousands of how many properties do you have under management now?
I think right now we're probably around 1,500, and I've got a team of 49, and that's part of the vertical integration of doing a fund like this, where we can keep costs down because I already have that staffing to be able to do that, as opposed to having to hire people to work for the fund as well. So everything we do, we come at it from the property management and the in-game standpoint, and I personally own about 200 properties, and so it's kind of everything I look at, well, how am I going to protect it during ownership to cash flow so that I can exit with massive equity gains? And of course, this project meets all those requirements. And, in all honesty, I loved it. I was going to buy them all. But part of this is we do want to be offering these funds because so many people are busy working and can't do the regular model. And so it's very important to me that we have these offerings to bring. And a new construction one is almost impossible to find where the numbers look like this. So it made perfect sense, which is why I called Kathy. I'm like, you can't say no.
Oh, well, behind the scenes, we're like, she hasn't been wrong yet, but wow, this sounds like a stretch. But the
You
more
said
that
the same thing about Sherman and Denison too. I remember.
You're right. You're right. I know. I was like, can it be possible that people keep moving that much further out from the
Yeah.
the core? But yeah, absolutely. When you've got Dallas, Dallas was never an expensive market, right? That was never an expensive. Now it is.
And no one's going into the city. Like people ask me, so like, do you go to Dallas every day? No, I go to Dallas like twice a year because it's so unnecessary. The traffic, the crime, it's totally different. We all live in the burbs. All of us live in the suburbs, and most of your employers are going into the suburbs. You're talking about, again, 30 minutes from Denton. For those of you that live in LA or Chicago or New York, how far can you get in 30 minutes? And so it's just a very different thing when you think about North Texas, fourth largest market in the United States, soon to be third, and you're 10 minutes from the border. You just can't beat it. Not for 112,500 a unit.
Yeah, that's incredible. Okay, we'll go back to questions. Do your monthly Dallas tours swing by Thackerville?
If I had something to sell in Thackerville, again, there's nothing. I'm trying. I've got actually a couple of my Denison builders. We are trying like heck to get projects together on the ground in Oklahoma. It's just hard. It's hard because there's not land that's like pre-divided and pre-parceled out to build single family homes. So you're having to do full neighborhood development to build anything, and no one's doing it because they can go over the border right now in Grayson County and get 370, 360,000 a house. It's coming. It will be there. But that's really what we're banking on, right? That's what we want to happen. We want these big master planned and big neighborhoods to come in because they're pretty much landlocked around the highways on both sides, Denison and on the Thackerville side.
It's a great question, which I think we already answered, but is your company also the property manager for this fund?
Yeah. Yes, we are licensed in Oklahoma.
Yeah. Streamlined vertical integration of company operations. That was that part of it. Are these fund only, or can we purchase units outright outside of the fund?
These are fund only. This entire project is only for the fund.
What are the barriers for other new projects to be developed in the future? I assume
lack of neighborhood parcels. So like, for example, for those of you that invest with us in Sherman and Denison, there's lots of single family zoned lots that we can go buy, or where you've got maybe an acre of property that has 4 lots and it's tax ID. So it's very easy to go to the city and they administratively can split it. We don't have that in Oklahoma. So it is full development, full projects. We did a project on the other side going up the other highway in Oklahoma. And for those of you that watched that, it was a massive undertaking, and that was just for a few acres. So it's just much more difficult. But now that the cities are getting their water rights and things figured out, now you're seeing people go buy these lots. It's coming. It's coming.
Okay. What are the construction materials used?
Same as Texas. Wood framing, brick exterior, same thing.
Okay. What are the main property damage risks in the area? Fires, tornadoes, and what is the strategy? Not tragedy. What is the strategy in face of rising insurance costs?
We're not really seeing massive rise in insurance costs. Like, for example, most of our fund properties are insured for $100 a month, including service line coverage for gas, water, and sewer lines. But there are a lot of areas having rising insurance costs. For example, I don't know if you can see behind me, I'm beachfront in Panama City Beach right now with a hurricane next door. Florida has had massive rising insurance costs. In North Texas, we really haven't seen a lot of that. We do have hailstorms, and it's occasional that we can get tornadoes that far south, but it's not really in the heart of Tornado Alley, and you're fully insured for all of that. You know, one thing about being in an area that gets hailstorms and gets thunderstorms like that, most of your damages are going to come from hail, and you're fully covered for that. So unlike if you're in California where your roof will age out of coverage, where by the time it needs to be replaced, it's just so old, it's not storm damage, you have to pay cash for it. We don't really have that problem here. So pretty much everything is an insurable loss from a storm standpoint. You know, we're not in flooding areas. We don't really deal with flooding in this market. And so just don't really have any of that. We don't really get wildfires. That's just, again, that's not something that we deal with.
WinStar opened in 2004, 20 years ago. Why has it taken so long for more housing to be built?
Because you can pay a lot less, you know, to kind of get your people together to build in Texas. Again, if there's nowhere for these people to live right here, where are they going to get workers? Where are they going to get construction workers? And if the construction workers lived there, are they going to go work in Oklahoma building $112,000 units, or are they going to go down into Grayson County, into Denton County, and build $400,000 and $500,000 homes? Again, everything is much more expensive down south, and so that is where the resources are going. If I was a builder and I had the option to build there for $450,000 for the fourplex, which he charged way too low for these, or to go down into the city and charge $1 million, where would I go? I'm going to go into the city. And that's the same reason why Sherman and Denison have such a housing shortage. And now they've got all the employers coming in. The same issue we've seen in Whitesboro that's right next to Gainesville. It's the same issue that we even saw in Denton for a decade. These areas, they built where they could make the most money. And then when the market went crazy, they even doubled down into those areas. Why would you go into a cheaper area when you could go into the real expensive parts and charge double? That's where everybody went. And that's why these northern suburbs have such a housing shortage.
How many new construction projects has your team launched, and what have been those results? This is our first build to rent fund. Although at Real Wealth we did a turnkey fund where we were buying in the Midwest, and we kind of split between new homes in Florida and build to rent in Midwest. And the new homes performed way better. Of course, they were in Florida. But for Texas, you know, what has been your experience at Texas and Oklahoma?
I've been selling new construction in North Texas for almost 18 years. That's the entirety of our model. It's always been built around 2 to 6 year hold and sell, predominantly new construction, 95% new construction. And so this is what we've always done. I myself have built properties. I own tons of new construction homes. For those of you who know our primary company, OmniKey Realty, and you're on our mailing list, you know that you get new construction listings every single day from us. New construction is what we do.
What is the percent that your property management company is charging the fund to manage this?
6.5%.
With the population being so low in Thackerville, what type of demand are you getting, and from where?
The population is low because there's nowhere for people to live. The population will not be low once housing exists.
Yeah, you got 3,500 workers right there.
Yeah,
Okay.
literally. I mean, and again, anyone who works in that area has to live somewhere else. There's so few options for housing.
I understand that the casino is on an Indian reservation. What percent of the buildable land in the area is not on reservation?
I have absolutely no idea. I can tell you the entire area we're working in and everything going up the corridor, that's not reservation land.
Could the fund be expanded and purchase more than 10 fourplexes?
Yes. Yes.
Who is building the homes, a local developer or national?
Just local. We don't deal with national builders typically.
Yeah, they're not going to do a deal like this.
No. I mean, again, $450,000 for an entire duplex, or a fourplex. I mean, the numbers are crazy.
Yeah, with a national builder, all the layers of people who have to be paid between, you know, by the time it's built. Yeah, that's not the case here.
Well, and they wouldn't sell to an investor. Like we'll take
they wouldn't do it. Yeah, they wouldn't do it to begin with. Yeah.
Yeah.
And we wouldn't. I wouldn't want individual units owned by different investors so close together. It could really go wrong. That's why on a project like this, build to rent, you keep it under one umbrella, one management company. It's managed like a horizontal apartment. So think of this really as an apartment complex. Yeah. Because, you know, the last thing we want to do is sell these individually to investors who all might be doing things differently and not well. So
and these are all one stories too, which is fantastic.
Okay, are the units already in construction? Any pending civil or legal issues? Any objections from the higher priced communities in this type of development?
There are no communities. There's just individual, more expensive homes. Again, this area is not doesn't have a lot of property. No, there's no issues with anything, and the first two are at brick.
Okay. They're I think we might have more pictures to show. They will be ready to be rented by end of October.
End of
right?
October for the first two.
Yeah.
That's correct.
Yeah, we didn't want to present this too soon because then your money's just sitting there. And it's a very small raise. This first part is like 540,000, and then a little bit after that, another 500 for the second, and that's going to be a while. So this is one of those things where there's going to be a wait list because we don't want money just sitting there. The first group will get in, and we'll go over that in a bit. Are there any chip manufacturing or tech companies planned to start in Gainesville?
I don't know of any at this time.
Okay. Is there other living infrastructure there already? Grocery, shopping, schools, etc.
Yeah, I mean, again, you've got 10 minutes to all the infrastructure.
Okay. I missed the first few minutes. What is the expected rent for these fourplexes?
The 2-bedroom, 1-bathrooms for $1,200, and the 3-bedroom, 1-bathrooms for $1,300, for an average of $1,250.
When we go to sell, will it be to individuals or to an institution?
You'll actually sell each fourplex individually. And I apologize, I just misspoke. They're 2-bedroom, 2-bathrooms. So we'll sell each fourplex individually. And
unless hey, if an institution wants to come and throw some money at us, we'll do that too.
Yeah.
That's the beautiful thing about build to rent is it is a horizontal apartment. Just look at it like we got an apartment here, but with an apartment you can't sell it in pieces. So in this case, if it doesn't sell in bulk, we sell it in pieces, and it gives you a lot of exits. That's why so many institutions are doing build to rent this way. Gives you more option. What are the different fees that will be charged? Okay, we're going to go over that in a minute. How long is it taking to build the fourplexes?
Yeah, so each set of what we're doing is anywhere from about 3 to 4 months.
Okay, so we're going to go back to there we go. There's the first one. So why rental housing? Again, potential for appreciation. We're already getting a lot of built-in equity. Potential cash flow, more stability and control versus other asset classes. The tremendous need for housing just in general across the country. Hedge against inflation, ability to leverage to purchase, insurable, and of course the tax benefits. And it's an LLC, so that's passed down to you. Debt financing. In the first year of operations, we intend to purchase all investment assets on a cash basis. Once the investment portfolio has stabilized, 12 to 24 months after initial property investment. You want to read this part and make sure this is?
Sure, yeah. So basically,
okay.
We're going to buy the first few in cash, and then we're going to refinance and buy the last few in cash, and then with that same refinance, distribute capital back to you as the investors.
Yeah. Okay. Whoop, sorry. Okay, so the minimum investment is 50,000, 50 units. Total offering max is 3 million. Again, this is a tiny raise for real wealth, so it's going to go quick. Minimum raise 550,000, and deadline 120 days from published date. Offering close date 9 months with 3 months extension. We're again not going to need to do that. Accredited investors only. Distributions. This is a summary of distributions during operations. See operating agreement for full details. Class A members shall receive a 6% pref on their unreturned capital. Then Class A members shall then receive an amount equal to 100% of their capital. So you're going to get the 6% pref first, then the return of capital. Then company profits will be split 70% to Class A and 30% to the manager until the Class A members reach a 12% target rate of return. After that, company profits will be split 50% between Class A and the manager. All distributions are made at the manager's sole discretion after expenses, fees, and allowing for any reasonable reserves. The manager expects to provide quarterly distributions starting 2 calendar quarters after funds are deployed from the purchase of those assets. Managers will be reimbursed for expenses. Affiliate receives a standard broker commission on purchase of properties that may be shared with managers instead of a separate acquisition fee. Annual asset management fee of 1.25% of total value of assets under management, calculated and paid on a quarterly basis. Disposition fee of 1% on the sale of each asset. And if financing is obtained, which it will be, refinance fee of 1% on the principal amount of loan, marketing website platform fee of $25,000 and $250 per subscriber. And the manager, as we said, will receive 30% of profits until investors get up to 12%, and then it's 50-50. Estimated timeline, we already went over this, but capital raise 3 to 9 months, portfolio stabilization 12 to 18, partial return of capital 2 to 3 years out, and then hold 4 to 7 years. So that's kind of the exciting thing about this is as we refinance, that money will go back to you in return of capital, but you're still holding the property for the profits. And it's illiquid. This is important to understand that the money is spent. In other words, when you invest, we're buying property. So you can't change your mind, a month later and get your money back. Potential risk, inability to secure financing to acquire the additional properties. Anything you want to say about that, Leah?
Yeah, I don't really think it's going to be an issue. I think rates are going to start coming down. But if for whatever reason it didn't make sense and that didn't make sense in the moment, then we would regroup. And I would assume we would probably go back for a raise. But I really don't have any concerns here. Getting this is very easy. It's a very lendable asset. My banks work in this area, so I don't have any lending concerns.
Potential risk could be just a delay in construction by the builder. Any issues or concerned about that?
Not really, no.
He's been on
I think
time.
actually we're probably going to move faster. It's one of the things I talked with them about because originally we were going to do 2 or 3 at a time, but I think we might go 3 or 4 at a time. So they're moving pretty quick. They look great.
Difficulty obtaining tenants, is that an issue?
Not in my opinion.
Illiquid, changes in market conditions such that homes do not appreciate as anticipated, and reliance on key personnel. This means that what would happen if something happened to you or me or all of us. So since you're the one who's there and managing it, what do you say to that?
Michael and I highly doubt all 4 of us are going to be in the same place at the same time, but I've got an attorney that works for me. I've got a vice president who could take over, and I'm in my 30s. I don't really think anything's going to happen. One thing I do also want to mention for anyone who's wondering, that appraisal at 530 for my building that's smaller right down the street, that is a brand new appraisal. That's not like an appraisal from a year ago or a year and a half ago. That appraisal is from within the last 45 days.
Amazing. Reporting. Okay, so we'll be reporting purchases, sales, refinancings, key information about assets under management, status of development, quarterly unaudited financials, information reasonably necessary for the preparation of the tax returns, the K-1s, and other such periodic reportings as provided. So whenever there's something new and exciting happening in the area, Leah's quick to send it to us and we'll send it to you. Okay. And then if you've done syndications with us before, then you know Anne, you know Kathy. They are just great at following up and making sure that you understand what's in the PPM and how to fill it out. So next steps, all instructions are on the investor portal. You can send questions to Anne and KMAC at syndications@realwealth.com. And now I will go back to questions because you guys are awesome and keep asking great questions. So how many units are you building? Does it depend on how much the fund will raise?
40 units, 10 fourplexes, so 10 at 4 units each, so 40 total units. There's a potential for 3 more at the end, but we'll cross that bridge when we get there.
And yes, this is recorded. It will be uploaded on the Grow Development's webpage, which is in the Invest Next portal. So you'll be able to watch this again. I'm sure you probably need a spouse or a partner to see this. So it will be posted there. Tax benefits, please explain. You would really need to take the PPM to your tax professional to have them talk taxes. We can't do that, but the typical deductions you get from real estate ownership apply and are distributed pro rata among the investors. Again, I don't want to speak out of turn, let the attorneys look at it and the CPA, but it's a flow-through entity. So those tax deductions flow through. You always have to read your documentation because the tax benefits are a great asset to any investment. And the PPM determines who is getting that. So you want to make sure that you're clear about that. And of course, it's passed through.
Like I can tell you from my portfolio, I don't pay taxes. So that's one of the goals as a real estate investor is you get to the point where your deductions offset more than what your income is. And so those are the kinds of questions you want to make sure you're asking your CPA. And those are what flow through with a project like this.
What projects has the builder worked on before and what's your experience? So I think some people just missed the beginning. So
Yeah. So I've actually already bought it from this builder. I have a almost identical fourplex that's smaller that I purchased from him, and they've been doing this for a long time. So this area is where he builds, and project again, very, very clean, very smooth. We've had no issues.
okay. Will we be looking into cost seg bonus depreciation?
I think so.
Mm-hmm.
I definitely think so.
Yeah, we have a great accounting firm, and it will take as much as we can get, right? Okay. Can you say again where to find the PPM? I will go back. Whoops. Go to growdevelopments.com. Click on the Invest tab, and it will take you right to the page where you'll see Oklahoma and our Texas fund. They're both great. They're just different. One's just over the border in Oklahoma and all new. The other, Leah's getting incredible deals in Texas, so cheap, renovating, and those are all kind of all over the place, but focused on Sherman and Denison.
Yeah. The one thing I will say, this one I anticipate to go very quickly because of where the IRR is and because of the fact there's a pref. And so if you're looking between the two, I would encourage you to act on Oklahoma first because this is a very small raise. It's going to go quick.
Can you provide a more specific location of the project? How far away are fire services?
So you're right over the border. If you cross the border of Oklahoma up 35, it's basically right up on the left. And in terms of where the fire department is, I don't know.
Look that up.
Not typically something we're looking at for something like this.
But it's 12 miles from Gainesville, is that right?
Yeah, to get down to the border. Yeah, the border kind of does this weird wonky thing. And so it kind of has this channel you go down into to get to the border. Yeah. It's not even 12 minutes to the border. It's 12 minutes to get down into Gainesville. It's closer to the border.
Okay. Does Oklahoma require investors to file income tax returns in Oklahoma?
The fund will file an income tax return, yes.
Is the prospective IRR inclusive of likely tax benefits, or is that IRR limited to the economics of the project?
That's just the project itself. Whatever benefits you have on taxes is between you and your CPA because not everyone can claim all benefits.
Yep, it depends on you. Okay, well, that is it on the questions. Really great questions, lots of experienced investors here. Again, you can go, I'll go back to that slide so you know where to go. What doesn't say it? Well, that's why. Growdevelopments.com. Let's just add a .com to this, growdevelopments.com. And then there's a little thing that says invest with us. You click on that and that will take you right to the portal where you'll be able to see the Oklahoma project. You click on that, there'll be, I really should take you through it, but I don't have it up on my page. But once you're there, you'll have information on the project, and then right below it, it will say offering documents. And that's what you click on to get the PPM. All right, well, thank you, Leah, for joining us on your vacation. Thank you all for joining us here. We look forward to getting your reservations because we know that this first round is just 500 and it's gonna go today, probably. No, it's gonna go very quickly. All right, thank you so much. And again, if you have any questions at all, just send them over and we will get back to you, and we'll probably next week do a Q&A follow-up because I know you'll have questions after reading the PPM. All right, take care, everyone. Thank you. Have a great day.